Let's talk through this EM sell-off first of all, because this is quite a concern at the moment, particularly as it relates to the contagion risk for the rest of the region. But what would you say are the factors that have led to this ripple and crisis that we see in EM assets and currencies? Is this country-specific issues, or are there broader macro issues at play?
I think there are two things. Obviously, people are focused on the idiosyncratic issues, how badly managed Turkey's been, what a terrible mess Argentina is. But it's more than that, because, of course, in the background, you have rising American interest rates, and that's putting pressure on anybody with a sizable external deficit that needs to fund that deficit, which is why, as you say, it's spread to India, it's spread to Indonesia in the region. And the good news for Asia is there aren't many countries that have a big funding requirement. Indonesia is really the only one. And they've tried to stay ahead of the markets by raising interest rates. As you say, it's only been partly effective.
How are you assessing the contagion risk then?
We think the contagion risk is going to be there because you're going to have interest rates in America keep going up. And so that's going to broaden the pressure on emerging markets. So, of course, what can you do? All you can really do is try to manage your economy prudently, try to manage the imbalances, try to keep the faith of the markets. But, of course, market sentiment can change very quickly, and economic reform tends to be a fairly slow-moving change. So it's tough for these countries.
So let's talk through some of the other, I guess, country-specific issues as well. When you look at the peso, for example, indeed one of the world's worst-performing currencies right now, down about 60% against the dollar so far this year. We've seen the government introduce an export tax and spending cuts, but do you think that's going to be enough to stop the bleeding, and what more can be done?
It still seems to be reasonably half-hearted. And of course, the other problem is President Macri saying, we know this isn't a great tax, we know it's not a great measure, but please bear with us, which doesn't really fill you with confidence in terms of the persistence or the commitment to these type of changes. So I think the markets view it as half-hearted, and as a result, are not satisfied.
What role do you think the IMF is going to play here? And if we did see additional funds coming from the IMF, wouldn't that represent just short-term gain, long-term pain?
I suppose the hope is the IMF is the outside agent of change. So Macri says, we don't really want to do these reforms. We know it's going to be painful. However, the IMF told us we have to. And it gives him a bit of a cover, I think. That's the way it's been used in the past, a cover for doing things which are politically difficult. And, of course, with elections approaching not too far away in Argentina, Macri's trying to balance that need for popularity with the need for doing something about this currency crisis they have.
Still watching? Perfect. Click here to watch another great video from CNBC International. Oh, and don't forget to subscribe. Thanks for watching.